Reserve Bank of India is the only authority which have the right to manufacture and issue the currency throughout our nation. This monetary policy had formulated to control the credit or money in our nation or in our economy. The interest rate that is charged by Reserve Bank of India for the lending to commercial and domestic banks. So, to maintain a monetary stability in our nation, the Reserve Bank of India had formulated the monetary policy. Hello everybody, a warm welcome to one and all. I am Mr. Hemant Kumar from the Department of Commerce and Management, Vidhyaashram First Aid College, MYSURU, the Temple of Excellence. In today's session, we are going with the subject Banking Law and Practice, that is session 2 of Unit 4. It is about Reserve Bank of India for first semester BCom students. This is agenda of today's session. In today's session, we are going with the concept of functions of Reserve Bank of India, monetary authority of Reserve Bank of India, and Reserve Bank of India as a regulator and supervisor of financial system. These are the three topics we need to cover in today's session. Functions of Reserve Bank of India. So, as we say, functions of Reserve Bank of India, the primary function of Reserve Bank is to maintain stability of Indian currency, right? So, the Reserve Bank of India undertake various kinds of functions that I had listed. First function, it is issue of currency note. Issue of currency note is the main function of Reserve Bank of India to issue currency note in our country, right? It is the only authorized body to issue currency note in our country, where Banking Regulation Act 1949 gave the power to Reserve Bank of India to issue currency note. Banker to the government. Reserve Bank of India act as a banker to the government, either it is a central or state government. Reserve Bank of India facilitate banking facility to state or central government, and also it deals with the deposit and remittance of fund, and also this Reserve Bank of India provide loan facility to government. Banker to other banks. So, as we had learned in Banking Regulation Act, Reserve Bank of India supervises all the commercial bank which is located in India, and also Reserve Bank of India provide financial assistance for the commercial banks. Hence, we can say Reserve Bank of India as a banker's bank. And also this Reserve Bank of India is going to facilitate loan facility for the commercial institutions for their development. Regulator of foreign exchange. To maintain a value of rupee in global economy, this Reserve Bank act as a mediator of foreign exchange. Regulator of foreign exchange. Reserve Bank of India act as a custodian to maintain economic stability of our nation and also to maintain a value of rupee in India. Control credit in economy, right? This Reserve Bank of India is the authorized body to control the credit or a money in our country, means to manage the value of a Indian rupee in our economy, right? And also it is the primary function of Reserve Bank of India, that is control the credit in the economy of India. Reserve Bank of India as a lender of last resort. In cases of emergency, the domestic bank and commercial banks, they can borrow loan from Reserve Bank of India by pledging the eligible security in Reserve Bank of India. Hence, we can say that Reserve Bank of India act as a lender of last resort. Banker and debt manager of government. So, Reserve Bank of India act as a banker and also debt manager of a government, right? So, this Reserve Bank of India give the financial assistance to the government, either it is a central or state government, and also it is going to facilitate government by banking facilities. And as I said, it is going to supply money throughout our nation. It is a monopoly body, right? And also credit controlling is a primary function of Reserve Bank of India. Hence, we can say that these are the functions of Reserve Bank of India, starting from issue of currency, banker to the government, banker to other banks, regulator of foreign exchange, control credit in economy, lender of last resort, banker and debt manager of government, and also money supply and controller of credit. These are the functions of Reserve Bank of India. monetary authority of Reserve Bank of India. So when it comes in terms of a monetary authority, it is formulated by Banking Regulation Act. It is the obligation of Reserve Bank of India to maintain these principles and monetary authority of Reserve Bank of India, right? So to maintain the monetary authority of our nation, Reserve Bank of India had formulated the monetary policy that we are going to learn further. Monetary policy. So to maintain a monetary stability in our nation, the Reserve Bank of India had formulated the monetary policy. This monetary policy had formulated to control the credit or money in our nation or in our economy. The main objective of formulating this monetary policy is to control the inflation and deflation of our nation, right? So to maintain the inflation and deflation of our nation, they had formulated this monetary policy. This Reserve Bank of India also used some kind of financial instruments to maintain the stability of our nation. Means it is the ultimate objective of Reserve Bank of India to maintain the stability of our country, and also by using financial instruments. By using the economic policy method, the Reserve Bank of India could be able to reach out the ultimate goal that is designed by the Reserve Bank of India Act 1934. That is the main objective of formulation of this monetary policy, which is formulated by Reserve Bank of India. It is going to focus on the credit percentage of our country and also interest rate and monetary supply, right? So these are the factors that is going to influence our economy of our country. Monetary policy instruments. There are various instruments that is being controlled by Reserve Bank of India. Instrument number 1, bank rate. So as I said, Reserve Bank of India is the only authority which used to lend the money for the commercial or domestic bank, right? So in terms of uncertainties, in terms of any kind of pandemic situation, the commercial and domestic bank borrow the loan from Reserve Bank of India, of which a Reserve Bank of India will be charged a percentage of interest for their lending, right? So that rate we call it as a bank rate, right? Means it is the interest rate that is charged by Reserve Bank of India for the lending money towards domestic and commercial banks. Liquidity adjustment facility. The Reserve Bank of India have the complete authority to maintain a fluctuations or the variation that is going to happen in our economy. It is a routine fluctuations or variation that is going to happen by using two tools. Number 1, it is repo rate. Number 2, it is reverse repo rate. What is repo rate? Say for an example, Reserve Bank of India, it is going to lend a money for the commercial bank. It is going to charge some interest rate that we call it as a repo rate. Number 2, reverse repo rate. If a commercial bank, it is going to keep a deposit in Reserve Bank of India, the fixed percentage of deposit in Reserve Bank of India, the interest that is generated by Reserve Bank of India to commercial bank, that we call it as a reverse repo rate. I repeat, please don't get confused between these two topics, students. Okay, repo rate means the interest rate that is charged by Reserve Bank of India for the lending to commercial and domestic banks, and reverse repo rate is, it is the interest rate that is facilitated by Reserve Bank of India for the commercial bank for their deposit. Means commercial bank it is going to make. I will give you best example. Okay. So, as per Banking Regulation Act 1949, it is the obligation of a commercial bank to keep a fixed percentage of amount as a reserve in Reserve Bank of India. Fixed percentage of amount as a reserve in Reserve Bank of India means for that deposit that is made by commercial bank in Reserve Bank of India, the Reserve Bank of India, it is going to give a interest for the deposit that is made by commercial bank to Reserve Bank, that we call it as a reverse repo rate, right? It is called as reverse repo rate. When Reserve Bank of India lend money to any of the commercial or domestic bank, it is going to charge a rate of interest that we call it as a repo rate. Please don't get confused between repo and reverse repo. Open market operations. So, open market operations are the routine operations that is undertaken by Reserve Bank of India. It maintains a stability of our currency by purchasing and selling of government bonds. Cash reserve ratio. This cash reserve ratio is a minimum percentage of amount that the obligation of a commercial or the domestic bank must keep as a reserve in Reserve Bank of India. Say for an example, a commercial bank had established, it have to deposit minimum percentage of money or a capital in Reserve Bank of India. That we call it as a cash reserve ratio. It comes under Banking Regulation Act 1949. It is going to say that each and every bank that comes under Banking Regulation Act 1949 must keep a fixed percentage of amount in Reserve Bank of India as a reserve for future uncertainties, right? So that we call it as a cash reserve ratio. Statutory liquidity ratio. This statutory liquidity ratio is a fixed percentage of amount of which a banker he must keep a percentage of amount with him for future uncertainties. Please don't get confused between these two topics. Number one, cash reserve ratio, it is a percentage of amount that the bank is going to keep with Reserve Bank of India for its future uncertainties. And statutory liquidity ratio, it is a ratio or a proportion of amount that the commercial bank it is going to keep with itself, a percentage of amount, that we call it as a statutory liquidity ratio. Corridor. This corridor is nothing but it is a operation of Reserve Bank of India where it is going to take in emergency situation. Means whatever the decision that is made by Reserve Bank of India, that must come under provision of Banking Regulation Act 1949, which is going to benefit the banker and also their customers. Last one, the market stabilization scheme. So as I said, it is the obligation of Reserve Bank of India to maintain a stability of our economy, right? So this market stability scheme is established by Reserve Bank of India to maintain a stability in a money market. Reserve Bank of India as a regulator and supervisor of financial system. Reserve Bank of India is the only authorized body to regulate a financial system and also supervise all the banks. Means the Banking Regulation Act 1949 gave the power to Reserve Bank of India as a banker's bank. Hence, it is going to issue the license for the banker. Hence, we can say that the Reserve Bank of India act as a banker's bank or the banker to the banks. The Reserve Bank of India take its name from Banking Regulation Act 1949. Actually, before Banking Regulation Act 1949 came into existence, it was named as Banking Companies Act 1949. When the banking regulation had introduced newly, it was named as Banking Company Act 1949, and later after a few years that Banking Companies Act 1949 was renamed as Banking Regulation Act 1949, because this Banking Regulation Act 1949 provides a formal framework for the banking company which is registered in India. So, which are all the bodies which is going to participate in the Indian system? It may be regional rural bank, cooperative bank, commercial bank, local area bank, non-banking financial companies, and also development financial institution. It is going to deal with all the kinds of bank which is located in India. The role of Reserve Bank of India as a regulator, it is the obligation to safeguard the public trust and national financial system. To safeguard the public trust in the national financial system. The main objective of Reserve Bank of India to provide a best facility to all the commercial and domestic banks in India. And also this Reserve Bank of India had settled down with National Payments Corporation of India. It is the authorized body to setting the payment system throughout the country. And these are the regulatory and supervisory functions which is controlled by Reserve Bank of India. Licensing of bank. Reserve Bank of India is the only authority which have a right to issue the license for all the kind of commercial and domestic bank which is located in India. And also Banking Regulation Act 1949 gave the right for Reserve Bank of India to issue license for all kinds of commercial and domestic banks which is located in India. After the introduction of Banking Regulation Act 1949, this Reserve Bank of India is also known as Bankers Bank. Approval of capital reserve and liquid assets of bank. Reserve Bank of India is the only authority which give the approval for capital reserve of a banking company and also regarding the approval of liquid asset of a banking company. Banking company does not deal with only money, but also it deals with capital asset and liquid assets, right? So the Reserve Bank of India is the only authority which give a right to deal with capital reserve and liquid assets. Branch licensing. For the establishment of any kind of a banking company, the banking company must take the permission with Reserve Bank of India. In the same way, in terms of expansion of bank, means say for an example, there is a head office that is located in MYSURU. Okay, this bank name is ABC Bank. Okay, so this ABC Bank want to establish its branch in Bangalore city. Okay, so if it want to establish its other branch in any of the city or the same city, it is the obligation of this ABC Bank to take the permission with Reserve Bank of India. And hence we can say that branch licensing is a power or the authority that is given by Banking Regulation Act 1949 to Reserve Bank of India. I repeat, if a banking company want to expand itself, it want to establish a new branch in a same or a different city, okay, it must take the permission with Reserve Bank of India. Until and unless the Reserve Bank of India give the permission, it cannot start its operation with its new branch. Bank inspection. So the Reserve Bank of India is the only authority to conduct a bank inspection of all the kind of commercial and domestic bank in India. Means Reserve Bank of India go through all the kind of financial statement and the relevant documents regarding the banking company and also regarding its functions and performance. Control over management. The Banking Regulation Act 1949 Part 2, it is going to say about the control over a management. Means in control over a management, the Reserve Bank of India have the complete authority to appoint or to eliminate board of director, chief executive officer or managing director of a banking company, as we had learned in Banking Regulation Act 1949, that is Part 2. Control over methods. Reserve Bank of India have the control over the methods that is followed by commercial banks. Say for an example, if the management is not good, if a policies is not good, if a framework is not good of a particular banking company, the Reserve Bank of India, it is going to intervene inside a banking company and it is going to formulate a new norms, regulation that must be followed in banking company. Audit. So Reserve Bank of India also go through the audit practice once in a year. The next session, we are going to the topic of issue of currency note. It is a function of Reserve Bank of India. The role of Reserve Bank of India as a manager of foreign currency. The developmental role of Reserve Bank of India. These are the three topics we need to cover in next session. Thank you.